only on BloombergQuint.
Good morning and thanks for tuning in. You're watching All You Need to Know on BloombergQuint Live and I'm Alex Matthew. First, the headlines. The death toll from the coronavirus has crossed the 900 mark. Singapore has detected a total of 40 cases while the number of cases on the Japanese cruise ship has crossed 70. A majority of the exit polls in the Delhi Assembly elections predict a majority for the incumbent Aam Aadmi Party. The results will be declared tomorrow. Mahindra and Mahindra's third quarter net profit was impacted by a 600 crore one-time provision due to impairment of certain investments. PTI reports that the government is looking to sell 5% stake in Steel Authority of India through an offer for sale. It looks to fetch 1,000 crore rupees from the sale. And oil prices post their fifth straight weekly decline, the longest weekly losing streak since 2018 due to a weak demand outlook on the coronavirus outbreak. Now, let's talk about the US markets. US benchmark snapped a four-day gaining streak, disregarding a strong jobs report for the month of January. Despite the corrections on Friday, all the three benchmarks registered gains of between 3 to 4% for the week as a whole. Renita Young of Bloomberg News brings you a wrap of Friday's Wall Street action in this report.
U.S. stocks closed lower on Friday and the S&P 500 snapped a four-day winning streak, all happening as the United States Federal Reserve said the coronavirus posed a new risk to the economic outlook. Coronavirus has made its way in many different industries, among them the automotive industry. Toyota and Honda temporarily halting operations in China. Burberry Group slipping after scrapping its guidance over the virus hitting sales in China. And Royal Caribbean Cruise Lines ended lower after more than 24 passengers were being screened for coronavirus in New Jersey. Meanwhile, the U.S. dollar was higher versus some major currency competitors. WTI and gold barely moved on the day, and copper fell. However, the United States did add 225,000 jobs in January. That's a look at your Wall Street action on Friday. In New York, I'm Renita Young for Bloomberg News.
Now, the global death toll from the coronavirus topped 900, with the Hubei province reporting the most number of fatalities in a day. Medical experts from the World Health Organization are all heading to the epicenter of the disease, with the agency's chief voicing concerns over the spread of the virus to those with no Chinese travel history. Selina Wang and Yvonne Mann of Bloomberg News get you the latest update.
You had more cases were reported around the world despite some stabilization in terms of the number of cases in Hubei province. You're seeing a cluster of new cases in France, Spain, and the UK. They all appear to have links to a French ski resort where the infected people had contact with a British man that had returned from a conference in Singapore where he is expected to have contracted the coronavirus. And that raises fears of this super spreader event. As you mentioned, the World Health Organization is raising concern over the spread of the disease from people with no travel history to China. Meantime, the organization is also sending a team of experts into China to try and examine the outbreak. The organization is also holding a global forum this week in Geneva to try and accelerate research into the outbreak. In terms of the case numbers, you mentioned more than 900 deaths, still more than 37,000 cases. I mentioned that stabilization earlier, and some scientists do think that the infections could peak later this month, but by the time it does peak, at least 1 in 20 people may have been infected with the coronavirus in Wuhan. But a caveat to this optimism is that there could be a major increase in infections in other regions still. I also want to point out that the Chinese government is going full speed ahead in terms of trying to contain this. They said they've spent already $4.5 billion out of the $10 billion that they pledged to try and contain the outbreak.
And Yvonne, over in Hong Kong, entirely unsurprisingly, we're seeing visitor numbers plunge.
Right. Some 75% or more, Heidi, in light of this 14-day mandatory quarantine. Those measures came into effect on Saturday. So we have seen the number of people traveling from China come down quite a bit on those 3 border checkpoints that are still open between Hong Kong and the mainland. In particular, the airport, the Hong Kong-Zhuhai-Macau Bridge, and the Shenzhen Bay Port. And as of Sunday night, we also learned of 918 people who have been quarantined, most of which are Hong Kong residents. So we'll see if these measures are enough to at least stop the outbreak from spreading further. And this threat of a community outbreak right now, medical experts say it's still too early to say whether there is that type of community outbreak. We have seen more transmissions within family so far. The latest was a family of 9 who contracted the disease after they went out for a hot pot and barbecue meal. So that certainly is a concern. And we have seen a spike up in cases as well by a third over the weekend to a total of 36 cases now here in Hong Kong.
And Selena, the PBOC, of course, begins its first tranche of special re-lending funds today. Tell us how is this expected to work and how significant the impact might be?
Right, we're seeing China trying to moderate the shock here with those liquidity boosts, lowering interest rates. The central bank, as you mentioned, continuing that first batch of those special relending funds to companies that have been impacted by the outbreak. But I want to mention that we are still seeing a very measured approach to the PBOC's activities. They're trying to be forthcoming in terms of liquidity and other emergency measures, but they've been cautious not to add stimulus that could add risks to financial stability. And speaking of financial stability, the coronavirus is already putting more stress on China's already battered banking sector. Remember, last year we saw the first bank seizures in 2 decades, bailouts of other key lenders. And essentially what's going on here is that banks are being enlisted to serve their civic duty by bailing out small businesses, providing more cheap loans, rolling over debt, and waiving fees. The S&P is estimating that the worst case scenario would cause bad debt to balloon by 5.6 trillion yuan, adding to the already massive 2.4 trillion yuan of non-performing loans that China's banks are sitting on. And some analysts are predicting that many more firms will go under. They'll be unable to pay their loans if the virus continues and puts even more stress on those small businesses. And for no surprise, economists are lowering their forecasts, some of them pretty dramatically. UBS estimating growth will slow to 3.8% in the first quarter. You have Goldman Sachs predicting a sharp slowdown to 4%. So we are seeing moderating efforts, but not enough to stop the sharp slowdown that many economists are expecting.
Right, that outbreak now reportedly worse than the SARS outbreak at the start of the century. Let's see what else is making headlines across the globe. Sue Keenan of Bloomberg News brings you the First Word headlines.
We start with the latest from Washington. Reports suggest that the Trump administration plans to reduce the amount of money it wants for border wall construction on the U.S. border with Mexico. Dow Jones says the White House will request $2 billion from Congress later Monday, which is significantly less than the amount it called for a year ago. The lower figure is said to reflect the fact much of the cost has been offset by shifting money from military resources. UK Prime Minister Boris Johnson, meanwhile, is preparing to announce a boost in infrastructure spending focused on the north of England. This follows up on a campaign pledge he made during the election. Government sources say the plan will include spending on 5G networks in rural areas and investment in public transportation. The FT says Johnson will also give the green light to the much-delayed HS2 high-speed trains this week. Ireland faces uncertainty about its election result, which looks set to leave the traditional two-party structure in chaos. Exit polls show a virtual dead heat between Fine Gael and the main opposition, Fianna Fáil, as well as a surge in support for Sinn Féin. The former political wing of the Irish Republican Army presented itself as a leftist alternative to the centrist consensus that has dominated Ireland for decades. And British Airways has set a record for the fastest subsonic transatlantic crossing by a commercial passenger plane. The 747 flight touched down at Heathrow after leaving JFK just 4 hours and 56 minutes earlier. A strong jet stream and the powerful Storm Sierra helped the plane to speeds of 824 125 miles per hour or 1,327 kilometers per hour. Supersonic Concorde used to traverse the Atlantic in about 3 hours. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's turn to the trade setup for the day in India. Agam Vakil has joined me to tell you all about that and also to tell you what's happening in the futures and options space. Well, Agam, it's a tough start to the day for trading in the global markets, and that comes off a bit of a correction that you saw in the US markets as well. How are we looking at the start of trade today?
Well, not necessarily the best, Alex, but it's going to be wait and watch, played by the ear for now, because while Indian markets have done well of late, we are looking at a lot of global volatility, and that may very well weigh down on the Indian indices. That is the case today, because the SGX Nifty is indicating in opening in the red. How did we do last Friday? Well, there was some amount of weakness in the benchmarks, but not as much for the broader markets, as you could see on your screen there. A lot of strength in the midcap index. But what about the banking indices? Well, there was a decline coming through for that one too. Let's move on and talk about your ADRs. For now, weakness in Tata Motors and HDFC Bank. And of course, we'll be watching out for names like Dr. Reddy's and Infosys as well, which are under a tad bit of pressure in the American markets. Fund flows, well, it's really hard, or rather it's becoming hard to get into a trend when it comes to fund flows, especially from foreign institutions, because on certain days we have sell figures, on certain days like today, or for that matter for Friday, we had a net buy figure, and not a very large one too. So which is why it is a hard thing to call out on a trend. But for now, FIs are buyers at this point in time. Let's move on and talk about your Nifty contributors, and of course we do have Infosys, Axis Bank and NTPC advancing and giving some support to the indices. On the other hand, Reliance Industries, HDFC and ICICI Bank, some of the heavier weighted companies weighing down on the index, which is why it lost nearly 40 points on Friday. To talk about the futures and options space, again, we saw marginal unwinding in the previous couple of sessions, and we have seen very little change whatsoever on Friday, as the index came off by around 0.3%. As far as the banking futures go, again, this is where we are seeing continued selling pressure coming in with an increase in open interest towards fresh shorts. As far as your range is concerned, based on options, open interest is still a 500-point range between 12,000 and 12,500. In terms of change in open interest, of course, we saw the Nifty come off to a certain extent, which is why we're looking at a little more writing around the 12,200, 12,300 calls, as you can see demarcated by those green bars. And moving on to the India Volatility Index, it was largely unchanged at around 13.7, but below the mark of 14, which is a positive, and the Nifty put call ratio edging up, or rather coming off to around 1.4 against 1.48. And finally, in terms of stocks, watching out for MRF, Vodafone Idea and Apollo Hospitals. And in terms of stocks which are seeing unwinding, let's pull that list up as well. We have Mahanagar Gas, where we've seen a subdued earnings coming through. RBL Bank and Indiabulls Housing Finance also in focus. Alex, we are moving into the last leg of this earnings season, so all eyes will remain on some of those names today.
Thanks so much for that, Agam. All right, now let's stick with stocks that you have to watch out for in trade today. We've got Nikki Mirchandani who's joining me now to tell you all about the stocks in news. Morning, Nikki. What's on your list today?
Sure, I'm going to start with a bunch of earnings first, where Whirlpool, there's a one-off quarter for the company, actually a weak one. Top line, we saw a muted growth out there, 4.9% uptick at a number of around 1,271 crore. Net profitability was higher by 20%. EBITDA, however, was seen lower by 8%. Top line essentially was, the growth can be attributed to the high base and the drive for older inventories. But essentially, it's the other operating expenses, which was higher on account of ad spends, which has impacted the operational performance of the company. Container Corporation of India, weak show there. Top line, we've seen an 8% downtick. Net profitability has taken a hit by as much as 36%. That's on account of operational performance, which too has shown a downtick of 11%. Now, do bear in mind the fact that there was an exceptional income in the base quarter to an extent of around 85 crore, which has also weighed down on the profitability of the company. ACC, well, fairly inline set of numbers there. Top line performance, if you look at that, it's a 4.2% growth out there. And net profitability too is down by 63%. EBITDA, however, is higher by 11%. The point to be noted here is the volume figure, which is shown a 4% rise there, and it's for the third consecutive quarter that ACC now would be outperforming in their industry. So fairly decent set of numbers coming in there. KEC International, well, a strong show operationally. Consolidated sales have come in at 16% higher, led by the growth in T&D and railway segment. EBITDA, which is up by 13%, is mainly on account of higher employee costs and other expenses. We're also looking at New India Assurance Q3, where it's a fairly decent, good show there. Premium earned is higher by 12%. Net profitability is at 494 crore as compared to a loss. In bunch of few earnings, Tata Motors, where JLR is expected to cut the production half or 1 day a week at its Solihull and Castle Broomwich plant. Also, it's looking to cut this particular production to achieve operational efficiency. We're also looking at Newland Laboratories, which has received 2 Form 483 observation for its manufacturing facility at Sangre by US FDA, and Reliance Capital, that's one stock which is expected to be in focus. Servicing of interest, it's essentially delayed the servicing of interest or principal of NCDs, which were falling on Feb 7th. Back to you.
Thanks so much for that, Nikki. Now, the counting for the Delhi Assembly election will start tomorrow morning. The question is, can Arvind Kejriwal's AAP sweep the Assembly once again, like the party did in 2015? Here's what the exit polls project.
All prominent exit polls conducted after voting concluded in Delhi show Arvind Kejriwal's Aam Aadmi Party returning to power with a healthy majority. Remember, in the capital's 70-member assembly, a party or an alliance needs 36 seats to be secured to form a government. In the 2015 elections, the AP had 167 seats, the BJP 3, and the Congress had drawn a blank. Here are the projections that are being made in this 2020 Delhi election. The India Today Access My India exit poll is projecting the highest range for the Aam Aadmi Party, numbers that are similar to its 2015 performance. Those are the numbers are such that that poll shows the AP winning between 59 and 68 seats, the BJP fetching between 2 and 11, the Congress drawing a blank, and so do the others. Those numbers similar to the 2015 ones. There are two other polls that show numbers in a similar range to each other, so let's take you those two first. The Public Jan Ki Baat, which projects the AP at between 48 and 61, the BJP at 9 to 21, and that ABP CO to 1, which is projecting the AP at 49 to 63 and the BJP between 5 and 19. That median roughly around 54, 55 if you were to draw that. The Times Now Ipsos poll is projecting a specific number. That poll is projecting 44 to the AP. That poll shows the BJP of these four projecting the best performance for the BJP at 23 seats, still below the halfway mark. So all these polls projecting a healthy majority for the Aam Aadmi Party. How is this turning out? You turn to vote share, and all these four prominent polls are projecting well over 50% for the Aam Aadmi Party in vote share. Now, when you see a party collecting over 50% of vote cards, it tends to win seat after seat into what's seen as a landslide election. The BJP on its part, if you see, only one poll projecting it crossing the 40% mark, all of them showing in the 35, 37, 38% range. That is the range the BJP has been stuck in for well over 25 years. Only in 1993 in the assembly election it won, where it crossed 40%. After that, this would be the sixth, if those numbers were to turn out, this would be the sixth election in a row that the BJP stuck in the 30-40% range. As a result, it lost 3 elections to Sheila Dikshit and now is being projected to lose a second election to Arvind Kejriwal. Remember, counting for the votes of 70 seats in Delhi will be conducted by the Election Commission starting 8 a.m. on the 11th of February.
All right, and we'll bring you updates as and when we get them. For now, let's turn to earnings again. And Gas Authority of India is expected to report a good operational performance in the December quarter, despite a marginal decline in volumes. Somit Sarkar has the details in this report.
Well, GAIL India is expected to report a strong set of numbers in the third quarter of financial year 2020. If you see the headline numbers, the revenues are expected to be higher by nearly 4% compared to last quarter, while the net profit is expected to be higher by 9%. On the operational side, the EBITDA is expected to rise by nearly 19%, while the margins are expected to come in higher at 9.9% for the company. Now, the gas transmission volumes and the petrochemical volumes are expected to see a marginal decline compared to last quarter. The transmission volumes are expected to be lower by 0.9%, while the petrochemical volumes are expected to be lower by 0.5%. Now, the EBITDA is expected to improve sequentially on the back of better LPG and transmission income and normalization of marketing margins coming in from the trading business of GAIL India. Now, the petrochemical profitability that is expected to remain weak yet again in this quarter, and the company is expected to report an EBIT loss for the fourth consecutive quarter now. Now, the petrochemical business is expected to be weak due to lower product margins and higher LNG prices. However, this higher LNG prices would aid the trading margins of the company in the third quarter of financial year 2020. Now, the transmission EBIT that is expected to be strong, as the second quarter was impacted by one-off refunds of nearly 190 crores rupees. So sequentially, this quarter is expected to be better. And lastly, the LPG EBITDA that is expected to be higher because of higher prices and lower gas prices in the third quarter of financial year 2020. Now, the key things to watch out for from GAIL India earnings would include execution of new pipeline, status of Kochi-Mangalore pipeline, visibility on placement of the US contracts, transmission volume and guidance on the trading volumes that the company gives, and lastly, any updates on the hive-off of gas pipeline asset would be important to watch out for from GAIL India earnings.
All right, now Tata Steel had a weak quarter, reporting a loss compared with a profit in the same quarter last year. But let's take a closer look at the numbers. Nikki Mirchandani is back to tell you about it. Nikki, what are you picking up?
Okay, I'm going to start off by saying that you can expect that stock to react negatively to the earning because there were dismal set of numbers. Top line, we saw a 9% downtick there. The number came at around 520 crore, and we saw a net loss of more than 1,000 crore as compared to a net profitability. That was on account of the EBITDA performance also, which was down by 46% at a number of around 3,619 odd crore. Margins shocking to 10% as compared to 17%. Just to give an insight of what actually went down behind the making of the numbers, it was the weak spreads and the exports which were higher, and they're dilutive in margins. So, that essentially weighed on the consolidated performance. International subsidiary also ate into the operational performance. In fact, you talk about the European division that posted its biggest loss that we've seen in the span of 10 years. So that's clearly weighed down on the earning performance of the company. The spreads were at historical low. And talking about the domestic reported EBITDA per ton, though that was in line with what the street was estimating, but then still the number was lowest since Q2 FY17. So disappointment was across the board for Tata Steel. In terms of other highlights, it reduced the debt by 3,370 crore. The capex guidance was revised higher to 9,000 as compared to 9,000 crore as compared to 8,300 crore. Essentially, moot point here is it said that it's going to be, or the important point here is going to be it's going slow on Kalinganagar expansion, and to an extent has also maintained the sales to auto segment. Going forward, the outlook doesn't look that pretty either. It spreads some amount of caution on account of coronavirus. It just says that it does pose a risk. Steel prices are picking up, but then better supply-demand balance is expected to be there, fundamentally sound for the industry as a whole. Domestic iron ore prices, Tata Steel has guided, may also increase if there is some amount of disruption.
Right, Nikki, thanks for that. Let's turn to other earnings now. A company that reported earnings over the weekend, Mahindra and Mahindra, a significant exceptional loss led to the net profit falling by over 70% this time around. Forum Bhatt is here to take you through the details. Forum, good morning.
Good morning.
What are you picking up?
Yeah, well, so the number were fairly in line operationally, but as far as the net profit is concerned, it was a clear miss this time around for the company. Revenue was down 6% at about 12,120 crore. Net profit was down 73% at about 380 crore rupees. EBITDA was up 5% and margins were seen at 14.8% versus 13.2% a year ago. Now, the miss in profits was basically on account of an exceptional loss recorded by the company of amounting of rupees 554 crore. This was as against a gain reported last year this time around. Now, the loss was basically pertaining to provision for impairment of certain investments. Now, the volumes also declined by 7% this time, which is what impacted the top line for the company. Now, other than than that, margins, however, were aided by lower cost and marginal increase in realizations this time. So all in all, not a very promising quarter as far as the net profit is concerned for Mahindra and Mahindra.
All right, thanks so much for that, Forum. Let's turn to some of the stories that you'll find on the website, BloombergQuint.com. Of course, you'll find all the live market action over the course of the day. Let me tell you about a couple of stories, though. Finance Minister Nirmala Sitharaman yesterday said that the centre, in its budget, had laid the foundation for increasing consumption while also ensuring that the government's investments are deployed to build infrastructure that will lead to the creation of a $5 trillion economy by 2024-25. She also pitched for rationalization of goods and services tax rates once a year and not every 3 months as the trend has been so far. She was speaking to reporters in Kolkata. And the government is planning to sell 5% stake in Steel Authority of India through an offer for sale which could fetch about 1,000 crore rupees to the exchequer. That's a PTI report that quoted an unnamed official. Officials from the Department of Investment and Public Asset Management and Steel Ministry are planning roadshows in Singapore and Hong Kong for the stake sale. However, the Hong Kong roadshow might be called off on account of the coronavirus. And with that, it's a wrap of this edition of All You Need to Know, but there's lots more to talk about, and you'll find all of that right here on Bloomberg Quint. Thanks so much for watching. Have a brilliant day.